Welcome back, everybody. Sive Morten is here with the forexpeacearmy.com. So today we once again take a look at the euro currency. Situation is changing rapidly here. So yesterday we said that we're keeping long position, no shorts, and if we will get lucky, then probably we'll consider new entry if we will get the pullback. But we were not lucky. So you can see that euro currency just accelerated further, and now it is start falling with a target cluster, as I would call it. So actually this is an area where the targets of the lots of different time frames stand. So here we have the monthly target around 1928. We have a range of the free drive target similar to the dollar index. Here on the euro currency it is not as accurate. That's why it stands somewhere in between 1885 and 1948. So this is an area where actually the upward direction might stop and start pullback. The same we could say about the big butterfly on the daily chart. So here is 1896, the first 127 extension of the XA swing, which actually here you can see the butterfly. But if you take into consideration the whole downside action, you could see that its target stand 1948. That's particular actually the upper border of the free drive pattern that we have. So it means that here once market is start moving above the 1885 or maybe even slightly above the 119 area, we should be careful for any bearish signs and possible reversals that might happen. I'm not speaking about today's session, but somewhere close to the end of the week, depending on what volatility will be on Jerome Powell's speech, maybe we will see today in the evening or United States session in the morning that actually euro currencies already will complete on some spike in all targets. So that's also could play some role. Just keep an eye on the situation. So, but at the same time, if we take a look at the dollar index now and take a look at this free drive, actually you can see that performance stands great, everything as we expected, and here is still room. So you can see that space exists and it should keep going lower. It means that in euro currency it also should keep going higher. So it's not yet on spot. Some potential still exists. It is early to change our plan, and we still need to keep going with it until it come to the end. Also, if we take a look at the 10-year bonds, take a look what's going on here. So yes, our 4-even target has been done, but at the same time, you take a look at what's happening on the performance. So if you drop your time frame more, you could recognize here some kind of the hand shoulders pattern. And now it is hand shoulder stands at the edge of the failure. It means that yields by the probably today, maybe today, tomorrow, nearest time, could drop below the 4%. That will be a weakness sign of the dollar, and this indirectly supports the idea of the free drive. So from the technical point of view, if you take a look, let's go back to the euro. From the technical point of view, since market already stands above the COP target, and let's keep going to the OP, normally in such a performance, you do not want to see any deep retracements. So market should keep going higher to the OP. We could accept some pullback somewhere inside of this range maybe, but would not want to see that market would drop down, erase the whole upper direction here, and return back down below the top here, and it will be not quite natural for a normal performance to the normal market mechanics of the upward tendency. And that gives us some advantage. So we just know what to keep an eye on, and we know the things that we would like to avoid. If something of this kind will happen, it will immediately tells you that the situation goes out of control and the trend is breaking. So until market shows natural retracements inside of this most recent swing, that's okay. So it probably might be used for position taking, we will see. Only if you, of course, do not frighten to trade during the current, I would call it as an epic Fed meeting. So it will be really lots of mess around probably. And personally, I prefer to escape this kind of trading. But this is very personal, and actually you could have absolutely different view on the current situation. This is quite different tune. Now we talk purely about the technicals. So on the 4 time frame chart, take a look what is going on. Market is breaking up. As we said, keep an eye on the 1850 because that will be most prominent target in the current situation. So the tops have been taken out here, stops have been triggered, and market was able to move slightly higher. So here's the destination point that we talked about yesterday has been completed. No near our invalidation point, as we call it. This is really vital point for a current upside tendency. But market now showing the downside retracement. So it means that on the hourly chart, or better to say on another picture of the fall time frame chart, just a bit more comfortable to use, we could keep an eye on a couple of levels. Most interesting for us is, of course, some area around 118.795, this first support, by many reasons. First of all, this will be more or less small retracement if market will reach this level. Maybe even a smaller retracement will be on a closer standing fib levels. But I'm just watching on the 4-time frame chart. Take a look. This is previous top, or double top, I would say, here as well. So it's breakout trend line here stands as well. And that's the most preferable level to see, to watch for, if market will show this minor pullback. This level is also acceptable, 1744, 1761. It is confluence, it suggests some deeper retracement, but still it's okay because this is 618 retracement of the recent swing. Although in the current circumstances, if everything goes well, market should not drop too deep and should not reach this level. Although it is not a problem, so it is acceptable. But in a normal situation, as it should go as it should, if it goes as it should, that's probably the level that market should reach in a retracement. This should be a small retracement. That's actually what we have currently. So, as I said yesterday, we could say today the same. If you have longs, keep them. Just do not forget to manage your stops, taking from time to time results, booking some part of your positions, especially at the eve of the Fed meeting. It will be important to add your stops. If you do not have any positions, currently we do not consider shorts. If we will get more or less normal retracement before the Fed meeting will happen, although I'm not sure, that you could make the decision whether you would like to take position in current circumstances or not, because here there is a risk of the big volatility. If even you will be right in the direction, you could be washed out of the market just occasionally by some spikes or something. So that's the unpleasant moment in the trading of such events. If nothing will happen interesting today until the Fed meeting, I prefer to wait and just act by results. So we will see what will happen tomorrow. Maybe lots of other interesting stops might be formed. So that's our common view currently on euro currency. See you tomorrow.